Hey everyone, Tony Ivanov here, lead trader and founder of TradeBuddy, and today I'm going to go over a video lesson on how exactly I made $665.77 minus some commission fees by trading GBR, AMRH, and PED. Now, AMRH and GBR, I had two losses on those trades. Those were kind of not the best trades. I didn't really plan those out. I was kind of trading those ones based more on just buying volume and momentum, and which is not really working so well in the current market environment. We're seeing lots of these stocks have fake out breakouts and they start to run up for 10-15 cents and they just slam right back down. But PED was a perfect setup, waiting for that nice big picture move, and that's what I really wanted to go over mainly today. So we're going to break down PED and MTSL yesterday, and we're going to look for those big picture obvious breakout patterns that you need to wait and not trade until you can find those. Now, thankfully, I do have a trading account over $25,000, so I'm able to trade as much as I want throughout the day. But for all of you with smaller accounts, you have to be very selective on what trades to take, and that's what I'm really going to try and reinforce here in this video by just focusing on the obvious setups and ignoring all the noise. Alrighty, so we're going to get into this video lesson. Hopefully you guys enjoy it. If you do, please leave a like. If you have any questions, leave them down below. And if you want to be notified on future videos and you want to join the TradeBuddy family, hit the subscribe button. And you can also join our free group on Facebook called the Day Trading Community. Link is down below for that. And I'll see you guys in the next video. Alright everyone, so today is July 17th, 2018, around halfway through this month, and today I traded AMRH, GBR, and PED. Now, like I said in the intro, AMRH and GBR were kind of not the best trades. I'm not too proud of them. Thankfully, I was able to cut my loss relatively fast on both of them, but AMRH and GBR, I was kind of just trying to play the momentum and like playing the buying volume. But AMRH had way too much pressure, downwards pressure from pre-market, and it just couldn't spike up whatsoever. And then GBR, that was just kind of a random play that I hoped would have buying volume after I got in, and it didn't happen, so I had to cut the loss. And now just touching on those two plays real fast, you really have to be able to avoid those impulse trades, especially when you're on a cash account or under the $25,000 PDT rule, because you're only able to trade so many times per day. You have to really just be able to wait, act like a retired trader that you don't have to trade, and then once you see that pattern that is just so obvious, then you jump in, use your size, and grow that account. So I'm going to cover my trade on PED because that's one trade that I was very proud of. You can see I made $1,175 on PED, but my two random trades on AMRH and GBR brought my profits down to $665 on the day. Still very good profits. Not going to complain by any means. Nice consistent growth. But still, knowing that you could have made a ton more just by not over trading is very important to know, and it's a very good lesson to learn because lots of people don't really realize that over trading is one of the biggest killers of profits, because you have commission fees and then these small unnecessary losses that will just add up over time and really not allow you to grow the account as fast as you want. So we're going to go over PED. Now this stock had no news whatsoever, and this one had a pretty massive run today from the $1.77 range and hit a high of nearly 350, hit a high of 343. So what caused this run? Why did everyone want to trade this stock? Well, we need some context. What was the biggest runner yesterday? Yesterday it was MTSL. MTSL was a huge spiker. Yesterday it went from $1.53 up to $5, no, even higher, mid $6 level. And this one had no news, not a good chart pattern, but the reason why this happened was because of I believe they had a reverse split 4 or 5 days ago. And what happens with a reverse split is that the float gets reduced. And I've talked about this before in the past. I'm not going to go too deep into it, but as we all know, the markets are like moving in waves of buying momentum and then shorting momentum. And the past week or so, we've been seeing that the shorts overall have taken control. They've been causing a lot of these low float plays to just have a quick morning spike and then they'll fall right back down. What happens is that the shorts get too overzealous and way overconfident, and they will not ever just take the loss. They keep averaging up their short. And one thing that I was telling my live stream chat room yesterday, and this is very important to understand, is that when you're a short, you have an incentive to get in early because there are not always going to be shares short available. If you're in earlier on the play, then you essentially lock in your seat, and that's why all of these short sellers like to be aggressive in the morning. They're aggressive on the morning spikes because they want to get in early and ride it on down. But what happens is that once they get too aggressive, they get squeezed. So MTSL is a very, very clear pattern here on the 1 minute chart. And this is what I really want you guys to focus on. Yes, this was running from $1.50 up to $3.50, but all in this range, there's really no good pattern to play it. Yes, it's going up, but in the moment, trading this type of stock is very, very, very volatile and very random. You wouldn't exactly know what the risk level is. You don't know what the pattern is. You're just buying the trend, which is okay, but it's risky. The pattern that I love here on MTSL is this triple top, flat top wedge. So what I mean by triple top is that if we look at the price, you see the price tested $3.50 once, twice, and then on the third break, it broke out. Now this is many patterns. You can call this so many different things. It could be an ABCD, it could be a cup and handle, but the main thing that matters is the psychology of this trade. So here's a cup and handle of it. So you can see it's called many things: flat top wedge, triple top, cup and handle, doesn't really matter. But the psychology of it is this. So just imagine this for a second. You're a short seller, and you know that MTSL is a junk stock. It has no history of holding its spikes, as shown by the daily chart. And it is up on no news. It's just up on buying volume. You know from previous chart history that after this spikes, it always falls. It will never, ever, ever hold its gains. So as a short, you want to wait until you see obvious resistance. And as you can see here, we saw pretty strong resistance here at $3.50. Now $3.50 has a nice round number to it, and that usually acts as resistance whenever selling starts to happen. So we have one test of 350, boom, we hit the top and we pull back. All right, now it looks like it's weak, and then we make a lower high, so it looks even weaker. And right in here, I bet you a lot of shorts added into their short, expecting this to be a head and shoulders. As you can see, this right here at this point looks just like a head and shoulders. Here's a shoulder, here's a head, and here's a shoulder. But then it didn't break the trend line, and then it squeezed on higher. Retests 350, and what happens is that a lot of these people who want to go short, they will risk off of the high of days. So once it starts to rile on up, they want to short more shares, trying to hold it on down, and then boom, it hits a double top. So if you're a person who is short, this is a good sign to you because it shows that there's very strong resistance there. And hopefully, because this stock has no news and is up on basically thin air, people will start to realize that, and they'll start to panic sell, and this one fall on down. But that doesn't happen. It makes a higher low, tests it one more time, and then explodes. So what happens here now? You are a person who's short. You have two options. You can either, one, take this small loss and potentially lose your position on a stock that is 100% going to fall, or two, you can average up your position, adding into the higher spike because you don't want to lose your seat in the stock. And a lot of shorts, they added into their short. They added, and eventually they just get squeezed and they have to buy back their shares, causing further spiking and causing further longs chasing it and buying it on up. So what I'm trying to get at is that you need to focus on these areas where you have both longs and shorts buying. These are the most predictable areas to play, and usually these have the biggest squeezes. So in this instance, when you buy the third test and the breakout over the price, it almost always works. Probably 70% of the time, just about. So this is exactly where I would want to be a buyer on MTSL. If you have a bigger account, you can even start buying on the run up, adding into your size, and then once it breaks, you buy more shares because that's the confirmation of the breakout, and then just ride this on up and take our profits along the way. So going to PED, we had the same exact pattern today on PED, and that's exactly why I traded this one. Now this one wasn't, okay, not exactly the same, but it's the same kind of mentality. Always think of your trades from a person who is a short seller. Think from a short's perspective. We see PED has no news. There's a morning spike from 177 up to 223, and it has a pretty strong pullback. Now we do have a multi-day resistance at $2.24. If you look at the hourly chart, I did draw this resistance at 224 from this area here around 2 weeks ago. So going into today, you see that we had this massive morning spike, and then boom, we hit resistance on a known resistance level. I'm sure that there were lots of people who were short, and they were adding into their short here, and they were going to have their risk set on the break over 224. Has a big pullback on the $2 and then bounces, makes a lower high. Cool, lower high shows weakness. If you're a short, you will add into your position here, riding it on downwards, expecting a crack of $2. But then boom, we make a lower high, or we make a higher low, and then we consolidate, and then we have the break of this trend on massive buying volume. So this is where I was a buyer of PED. I started buying some shares down here on the break over $2.15, and I added more shares on the break over 224, and I sold into this pop into 250. This is almost the same exact pattern as like a triple top, flat top wedge, or cup and handle. Like when you think of the psychology of the trade, because what happens here is that once the people who are short see this break of this wedge and they see this massive buying volume, they have two options. Like I said before, they have either one, they can cut the loss and lose their spot in this trade where they know that over time the stock will fall back down, or two, they can average up their size, add into the spike, hoping that it would not run any further than that. But of course that never happens. And you can see here, once we came back down after this one large breakout over 224, we came back down and we confirmed it as support. That shows strength, and that makes people who are short very scared. Then of course they start to cover, longs jump in to buy the dip, and then it just squeezes on higher and higher. So unfortunately, I was not able to take the whole profits of this trade. I sold this one pretty soon. Like I said, I traded this one from 224 up to 250, and then this one just squeezes on up higher and higher and higher, hits a high of 310. And then we do this big consolidation here. And my suggestion here midday is that you should always use a longer time frame, whether it be a 3, 4, or 5 minute chart. Doesn't really matter, but the main thing to understand is that the longer the time frame, the more significant a chart breakout is. So on the 5 minute chart, you see we have the same exact pattern that happened in the morning, but just on the bigger time scale. So I located this little, this large wedge midday, and once we broke over 287, I bought some shares. I bought 2,000 shares, anticipating the break over 307, and we just slowly tracked on up. Once you broke 307, I added more shares and I sold into the pop into 325, 350. So that's how you have to play these stocks. The main thing is that you don't have to trade every single little breakout and every single little dip, because if you try to do that, it'll be very, very tough and you will be over trading. Like, you don't want to buy this breakout here. You don't want to buy this breakout here. It's too random. Look for the big picture plays that everyone's watching for. And if you're a long bias trader, that would be these breakouts, these wedges, and these cup and handles. Alright, so that's just a quick little video lesson here on PED, how to trade the current market environment. Hopefully you guys enjoyed this, and I'll see you guys tomorrow.